One, two, three. So before I start the video, I would just like to take the time to apologize for spreading fake news on my social media or even in my Discord chat about the Evergrande defaulting on the 10th of November. With that, let's get right into today's topic. So for those of you who are following me on my social medias or even in my Discord chat, should know that I actually shared a PDF or shared a screenshot of a document that actually led me to believe that Evergrande defaulted on the 10th of November, which is one day before Singles Day. However, to my surprise, when I woke up the next day, I actually saw that Evergrande did not default. Instead, they actually paid most of their overdue interest again, and this time around by a very narrow margin. So I actually did discuss in one of my previous video, where I'll leave the thumbnail here, about this entire idea of time value of money and why Evergrande or many of these other property developers will delay their payments all the way to the last day because they're able to exploit the short-term interest rate. But anyway, it's probably not enough to save them. I think the only way for Evergrande to be saved is if Elon Musk actually tweeted Evergrande on his Twitter account and maybe more people will help provide them with some sort of funding or something. So even though I refrain myself from constantly updating you guys about Evergrande, but it seems to be always on the media and always on the headline. So I really just wanted to take this video to address many of all these concerns. Now, based on Straits Times, Evergrande said to avoid default after paying overdue interest. So customers of international clearing from Clearstream received overdue interest payments on $3 US bond issued by Evergrande. Investors had been waiting to see if the embattled developer would make the coupon payments totaling US $148 million before the end of the 30-day grace period on Wednesday, which is also why when the clock struck 12, I received that PDF, which led me to think that Evergrande actually defaulted. But yes, please do your own due diligence and please make sure that you consume the right form of media. Anyway, the property giant pulled back from the brink of default in October by paying other coupons before the end of their grace period. But the crisis at Asia's largest junk bond issuer is hardly over, as it grapples with more than $300 billion in liabilities. A string of other developers has also fallen in distress amid a crackdown on the speculation and leverage following years of debt-fueled expansion. I think this entire idea of $300 billion in liability, it's a little bit overblown. Of course, in theory, I understand that Evergrande do have $300 billion worth in liability. But we have to understand, especially for companies operating in the real estate and property sector, most of them also have a whole mountain of debt. They're usually leveraged to a certain extent as well. So for many people who have been blowing up the numbers saying that, they have to settle $300 billion worth of debt or $300 billion worth of liability in the coming 1 year, 2 years, or 3 years. I think that's a little bit too much of an ask, even though in theory, I know that they will have to pay off all their debt sooner or later. But I'd just like to say, hey, let's all treat them like a normal company. If they're still treated as a functioning property developer, they will definitely still have some form of debt on their balance sheet. So no, they don't have to settle $300 billion. But of course, I'm also not downplaying this entire situation. I'm not saying that $300 billion is a small number. It's definitely no small feat, and they also pose a very important risk to the entire financial system. Now, the authorities has also sought to limit the fallout from the wider property market distress, with the central bank injecting the liquidity into the financial system. I think I did previously discuss this concept a little bit before, but I'll just expound a little bit in this video particularly. So I think many people in this case, especially those in the media, have been saying that, China has been relying on their property sector and their property market to prop up the entire GDP growth and to make China look like it's the up and rising star, where people are eager to invest into the entire country itself. And upon closer inspection, it's true. Real estate makes up around 25 to 30% of the entire China's GDP. And with this entire crackdown and slowdown, requesting all these different developers to leverage down and to ensure that they keep in pace and do not go overblown, of course, many people are saying that, China's GDP is going to slow down, they might even experience a recession in time to come. I think I just have two main points in this entire discussion. Number one, I think we can all agree that the Chinese government is kind of a control freak. They have been trying to engineer the entire country since the start of the century, in the early 2000s. They have been engineering the social aspect, they have been engineering the financial aspect, and more importantly now, they're trying to tinker with a lot of all these different levers to ensure that all the Chinese people are not only lifted out of poverty, they have something to look forward to, they have the property to buy, they have things to invest in, and they have a good retirement. I think more importantly, at least on the international stage, many people cannot appreciate the principle that housing is meant for living rather than speculation. A lot of us actually see property as a form of investment, or actually a hedge against inflation, or just a form of alternative for their retirement. All these assumptions and all these different viewpoints actually make sense. However, I think in this case of the property market, particularly in China, it has kind of gotten a little bit out of hand and it is a little bit heated up. In this regard, if you are the government and you have been seeing that your property markets continue ballooning and even borderline stepping into a very bubbly territory, what are you supposed to do? Many people say that, oh, just leave it, let the free market do its thing. But I think as a government, if you take it from their perspective, I think it is quite irresponsible of them if they know that this is probably going to play out quite badly. And more importantly, if this bubble is given the green light to continue ballooning, and when the bubble finally bursts, I think the injury and damages will be a lot more devastating to all the stakeholders. That's on point number one, which is also why there's this stricter control and essentially this kind of cooling measures put in place, like the 3 red lines. Number two, I would like to focus on the current leverage of the entire Chinese economy. Many people have been speculating that this entire property thing will not end well because a lot of Asians, especially Chinese people, like to lock up their assets into properties. And I do agree because it's exactly the same situation in Singapore as well. That said though, we have to go back to the intentions of the Chinese government. Why step in now? Why restrict all these property developers? What are they afraid of? Essentially, they're just afraid that this entire housing bubble will spiral out of control and will destroy and decimate the entire financial system. And if you were to look at the facts, specifically the policies in China today, the interest rates are not at all-time lows. They're hovering around 3-4% right now. They are not really doing a lot of quantitative easing. So the emphasis would then be there's still a lot of room for the Chinese government or the Chinese policymakers to maneuver their way through the flexibility of the changes in policy. And more importantly, the 3 red lines. There are no rules governing them saying that, hey, they cannot loosen the grip. They cannot set the percentage in a much more lenient fashion. Nobody is saying that they can't do it. Don't forget we are in China. They rule their own country. Nobody sets the rule for them. So that's basically the general outlook of China and the property market. And as far as I'm concerned, even if they want to punish Evergrande, they will allow them to pass away peacefully. It wouldn't be a collateral damaging and destroying all the different stakeholders involved. Now, I also came across this interesting Wall Street Journal article. I'll quickly run you through them and maybe provide you some form of insights. So the headline of this article states that what the smart money knows about China's Evergrande crisis. And the essence of this entire article, it's in the first 3 words. Nobody knows anything. Let me repeat. Nobody knows anything. Not your Wall Street Journal, not your Xinmin Daily, not all your daily correspondents, or not your reporters on the ground. And especially not all the nonsense YouTubers online rolling their tongue off as if they know everything that's happening in China. I think even the Chinese government is not confident that they know and have fully grasped the entire situation. Interestingly enough, people on the internet happen to know everything. Surprise, surprise. Anyway, on Wall Street, hype almost always leads to a heartache. And the experience of people who have hopped onto the bandwagon of investing in China has so far been no exception. I won't disagree. China held $43 billion in net assets at the end of August, up 44% from 12 months earlier. Over that time, investors added about $13 billion in new money. More than 1/4 of the total assets of this fund have come in over the past year alone, just in time for a long march of losses. Between its inception at the end of 1992 and this August 31st, the MSCI China Stock Index has returned an average of 2.2% annually, including dividends. Over the same period, the MSCI Emerging Market Index grew 7.8% annually. The S&P 500, 10.7%. That covers a nearly 30-year period in which China's economy often grew by at least 10% a year. Late last year, President Xi personally intervened to squelch the IPO of Ant Group shortly before the financial firm could launch what would have been the largest IPO in history. The companies themselves never saw this coming, and Wall Street analysts had been touting the stock. Only recently did Chinese authorities stop flooding the real estate market with cheap credit. These are policy interventions to reshape Chinese societies, guided by Xi's personal agenda, intended to effect objectives that aren't always knowable, because the agenda is fluid, opaque, and unpredictable. Investors should be cautious about relying on past experiences when forming expectations about future investing outcomes. So as we can tell, the author of this entire article, which is Jason, has a certain political inclination, and he's not exactly the best, or he does not accept whatever that's doing in China. All the statistics that he has shown, all the commentaries that he has put into this entire article, It's quite obvious where does he stand on this entire issue, which I also love, because statistics and numbers are cold hard figures. They do not have political or they do not have personal affiliations or inclinations. That said, the people using the numbers can twist and turn to paint the narrative that they wish to portray. So let's go back to the actual numbers that he pointed out, which are actual figures by the way. 2.2% of the MSCI stock index for the last 30 years. Emerging market index 7.8% annually. S&P 500 10.7%, while China's economy growing at least 10% a year. Does not make sense, right? The fundamentals of the economy has never been stronger than ever. However, the returns of the stock market has been lackluster at best. And people have been saying that, oh, it's because of the Chinese government, it's because of how they've been organizing themselves, etc., etc. I think the easiest way for me to explain this is because of the data set that he actually drew, which was after the tech crackdown. And as you all know, the entire MSCI China Stock Index has all the big tech firms, Alibaba, JD, Pinduoduo, Tencent, whatever. And all these companies lost a tremendous amount of value over the last 1 year or so. So in this case, of course, if you're an investor who buy into the argument that, hey, I don't understand China, I don't understand what they want to achieve, I don't believe that they want the best for their citizens, and all their government policy seems absurd, and more importantly, they're chaotic and they don't know what they're doing, don't invest in China. Please do me a favor, get yourself some good night rest and exit out of all your Chinese equity position, because you ultimately don't believe into what you're buying into. That said though, there are two sides to every coin. If you believe that the Chinese economy continues to be fundamentally strong, you buy into the entire argument of the Chinese government's direction and vision, and you know where they're trying to bring the country towards. Where do you think the stock market will be at least in the next 10, 15, 20 years? And more importantly, I think Ray Dalio also emphasized the same point. Your investments in the Chinese stock market should be a strategic one. It shouldn't be an in-out. If you want to do speculations or you want a quick turnover, playing in a much more matured financial system and a much more sound financial market would probably make more sense. And especially if they respect free market, where they allow people to just blow all the valuations sky high and then just crash everyone down again, then sure, please go ahead. I think you can subscribe to many other stock markets out there. However, the other side of the coin is the valuations of a lot of all these equities is extremely undervalued due to the increasingly solid fundamentals. So I'll leave it up to you to decide which narrative you want to buy into. Don't always consume articles or medias just at face value. Always look into what is he trying to insinuate, read between the lines, and more importantly, make your own judgment. And last but not least, I actually came across this LinkedIn article that was quite interesting. I'll just show you the other side and what other people think about it in comparison to the Wall Street Journal article that we talked about. So Mark Lee actually wrote, "Why the West got it wrong." The West thought that the collapse of Evergrande could cause serious damage to China's financial system and shake the world's confidence in China, comparing it to even the collapse to Lehman Brothers. But to its surprise, it did not happen the way they thought it would. The regulators have gone one step further now. China sent in a team of competent crisis managers to immediately liquidate the company's non-core and non-critical assets. And they tried to pay off suppliers so that the projects could continue and the property buyers would be at least affected. Investors will also be paid where possible. So the regulators have also gone one step further now. They urged the Evergrande founder to tap onto his personal wealth to pay the company's debt. China is taking a different route, one that will make the other owners of huge companies to think twice about the way they are managing their companies. Once again, the West have failed to understand China and how her socialist principles have continued to value the welfare of her people instead of bowing down to the pressure of the huge corporation that is so evident in the West. So of course, I'd like to preface and give you some context. Mark Lee actually is also a Singaporean, which is like me. I'm not saying that everyone in Singapore is extremely bullish about China. Every single country has their own proportion of people that are for and against particular issues. And I would also like to state my position that, hey, not everyone in the West don't understand China. Not everyone is so anti-China. Of course, I believe that there's a greater proportion of people in the camp. However, I would not say that everybody is coming out from the same mold. Everybody has their own thought processes, everybody has their own thinking framework. So let's not try to categorize people easily. So with that in mind, I've presented to you one that is biased against China and one that is biased for China. So you make your own decision. But I think I'd just like to end off this entire video by dissecting one of the comments that was so enthusiastic and so excited about replying to that particular LinkedIn post. So Mike Small actually said, "Oh dear, a lot of dreams and wishful thinking in there, my friend. It looks like your military propaganda, blah blah blah, both are wrong and will fail, no facts. Let's start with some facts. Evergrande, 300 to 500 billion. The owner has 3 billion. Do your team who have sent in have $500 billion? If not, my friend, Evergrande and all its competitors will fail. Too big to save. Funny enough, of course, everybody has their own inherent biasness. But when you scroll down and then you see an entire conversational discussion trying to go somewhere where people are trying to develop their points and trying to ensure that their theses are being heard by the other party, then that's when Mike Small actually returned back and said that, oh, hashtag genocide, hashtag organ harvesting, hashtag systemic rape, hashtag Uyghurs. Is that really how we are going to proceed on with a productive discussion about having this entire idea of sharing your own viewpoints and putting your biasness at the door and trying to ensure that there's a productive discussion and let each other understand our points? Really? Is that how we do things? If that's the case, then whenever I speak to someone else, I'll say hashtag slavery, hashtag start a war in Middle East, hashtag killing civilians, hashtag build the wall. Is that how we're going to have a productive discussion? Really? I think this really screams childishness and immaturity in terms of thinking and in terms of how you present yourself. And I would just like to say I'm utterly wrong. I thought that people will only do this behind an anonymous account. They'll hide behind the very single trait of the internet, which is anonymity. But that said, people on LinkedIn are also so open to just dissing and so open to being so uncultured. I can't really find a better word, but yes, it seems like the values don't align. It seems like whenever there's a certain form of discussion that has to take place in order for a topic to be developed of greater depth, that's what you have. Hashtag grow up. With that in mind, I'll see you in the next video, but more importantly, I'll see you on the moon. Goodbye.